Hey, good afternoon, everyone. Good afternoon.
Good afternoon.
Afternoon, Professor.
Hi, how's everybody? All right. Okay. So sharing my screen now, and okay. So uh, yesterday, we were we started on the financial statements, right? So let me find my where is that? Yeah, whiteboard. Okay. All righty. But before I do that, let me quickly check how many people. Oh, so I see. Basically, I see like 13 people here. 13, and then in the forum discussion board, I see only okay 12 people. Looks like I have 12 people there. So one of the people in the collaborate is not has not signed into the discussion board. So if that is you, please do it ASAP. Uh, okay, then let's go into our. Uh, so I think we were talking about. We got started yesterday on a little bit on the financial statements. Let me just quickly catch up with where I left off. Where I left off. Um, so yesterday. Uh, no, 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 no. I think that I posted it there. Last part. Okay. Particular manufacturer, right? So model, okay, then so it's basically income. The price will be the same. Model X, the price. Okay. There and so I will. All right. So we can exactly pick up from where we left off yesterday. So of course, income statement mainly consists of income and expenses, and income and expenses come from both of them come from two major sources, right? So what is the primary source of income? Of course, it's the sales revenue. Sales revenue. And all the businesses must sell something, right? Make and sell or just sell, right? Of course, manufacturers, they make things, they make products and they sell, whereas retailers, uh, retailers buy the products that manufacturers made and then they sell. So, in a way, retailers, um, that part I'm gonna talk about that a little later. So we defined revenue yesterday as price times quantity sold. Okay, and I told you this is the best definition of revenue. Don't try to come up with a word definition. Verbal definition is always, not in verbal definition is never infallible, It's not foolproof or fail-safe, and it can get very fuzzy because every time someone tries to define revenue, then everyone adds their own interpretation, right? So it becomes slightly different every time. So, but the mathematical definition is indisputable, right? Nobody can deny, nobody can dispute that revenue is price times quantity, isn't it right? Um, if you if you sell, if you are selling computers, and let's say your computer is $500, and if you sell 1 unit, revenue is 500. If you sell 10 units, revenue 5,000. If you sell 100 units, revenue is 50,000. Sell 1,000 units, revenue is 500,000. So uh, nothing. I mean, there's no flaw. There can be no flaw to this logic, right? So that's why mathematical definition is the best. But some people, and I also brought it up yesterday. What if we are not dealing with only one product? Okay, still the same thing. It doesn't matter. Uh, suppose we have. I wish I could have a second page. Okay, I'll have to do it just here. Um, we have product X and X, Y, and Z. We have three different products made by three different manufacturers. And then, how do we define our revenue? Our revenue is still then, what do you think? There will be price. So our revenue will be how many units of X were sold? That's QX, right? And then what was the price of X? PX, right? PX times QX. Plus then, how price of Y times quantity of Y. Quantity sold, right? Units sold. And price of Z times quantity sold of Z, right? And we can extend it to any number of products, right? And also, let's think about it. I mean, a simple way, uh, a simple way of expressing this, right? In a compact, condensed way, uh, we can do basically Pi times Qi, where I runs from, uh, if there are X, A through Z, right? So there are 24, 26, isn't that? 26 different products we have. And that I stands for individual, right? Individual product or individual. So I runs from A through Z, and that's we do this, we extend this all the way to Z. I mean, also we can just call it I runs from 1 through N. I mean, if we have N number of products, if we are selling N number of products, right, we can extend it. N can be any number, so we can extend it to any number. Okay, so that's what the, I'm going to have to rewrite this all over again, I guess. But then the secondary source of income is investment income. Okay, Now, investment, it's just one example, um, but investment income is what? If you have invested in stocks and bonds, then there would be cash flows from those investments, those instruments. If it is stock, you'll get dividends. If it is bond, you'll get interest payments. Interest, right? Again, uh, that's not the only thing. Suppose you can have if you are basically subletting, or if you're renting out if you're renting out something, you have rental income, right? You have rental income. Uh, so, and the rental income is in a broad category. I mean, investment income belongs to passive income. Passive. And passive income means you're not engaged in any operating activity, because you're not actively selling anything, making anything, selling anything. You're just uh, renting out. So the income from it is passive. Also, when you invest, um, when you invest in stocks, the dividend from the stock is passive. I mean, you're not actively uh, doing anything to receive that dividend. Um, Also, interest from bond, it's also a passive income. So if you think about it, really wealthy people have a lot of passive income. Their wealthy people's income are really passive income because they generally, they don't work. Uh, they just have some title, and then like their income source of their income is their wealth, and their wealth is invested in something. Like their wealth is invested in the stock market, or in the bonds, or in real estate, and right. So that's passive income in broad sense. But I just used one example of passive income, right? That's all right. So then the sources of expenses. So what is the uh, e- expense means basically cost, right? Um, so there is first uh, direct cost and indirect cost. Okay. Um, so think about it. If you are a manufacturer, you're making something, right? Manufacturer makes something. Um, so there is direct cost. Direct cost means cost associated with production. In other words, direct cost is a cost that's directly related to production. And uh, if you have taken microeconomics, right, you understand what is factors of production. Think about it. When you make something, if you're a manufacturer, when you make something, there are three three types of inputs, or three factors of production. Anybody knows what they are? Three factors of production or inputs. Anyone? Oh, don't type in there, please. I can't see. My screen is, completely.
Professor, is would it be land, labor, and capital?
Yes, yes. Who said that? Who?
Sadie?
Sadie, yes, Sadie. You're getting 0.5 for that. Today is 0804, and this is business 210. Yes, what they call, in microeconomics, they tell you always, land, labor, capital. But actually, if you think about land, uh, that's not modern interpretation. I mean, in the old days, land, now, labor, that's obvious. We need to, labor has to go into, somebody has to work on it. Capital means physical capital, like production equipment, right? Physical capital, like production equipment. So, where did I put it? So I'll have to erase this. So capital, labor, um, capital is physical capital, means of production. When you say capital, people generally think of, financial capital. No, financial capital is just one type of capital, but capital is basically defined as means of production. So it's mainly physical capital, like, a plant and equipment, right? Plant and equipment, machines. Those are physical capital. We need capital. I mean, these days, especially, everything is, capital. Labor, of course, even though, let's say our production process is so fully mechanized, still somebody has to sit behind the control panel. Isn't that right? Uh, Labor is, and then what they call land in economics, microeconomics, in today's context is natural resource. It means natural resource, actually. Isn't that right? To make something, you need natural resource. Steel, petroleum, or whatever, most of all, plastic comes from petroleum, right? Plastic comes from petroleum. So without natural resource, uh, and natural resource comes from land, some come from the sea, but when they still, I just don't understand why they still say land. Agricultural, produce comes from land. That's true. Minerals, mining comes from land. That's true. Um, what comes from the mining? That's natural resource. That's true. Uh, but directly, the, in today's economy, it's natural resource, right? Um, in 18th century, everything came from the land. In 18th century, and like 18th, 19th century, especially 18th, 19th century, um, the share of the agriculture in the national economy was quite big. Most countries were basically, on, uh, agrarian economy. Most countries were agrarian economies, meaning, everything came from land. Um, and so a country with a fertile land, fertile, uh, agricultural output is high. So, agricultural giant was the also the superpower in those days, right? But not anymore. I mean, still agriculture is important, right? And the biggest, industry in the U.S. is agriculture. If actually biggest export, I mean, biggest export of the U.S. is uh, agricultural uh, products like wheat, corn, and but anyway, think about it. these are the factors of production or inputs. Inputs of production. So that means what? To make anything, these are direct inputs, right? To make anything, these are the direct inputs. So direct cost means the cost of these inputs, right? So so if everyone is okay with this, I'm gonna delete. So again, two major sources of income: sales revenue, which is defined as P times Q. To passive income, such as investment income. So sales revenue is actually sales revenue is, that means sales revenue is active income. Yeah, you had to sell something that, that's the operating activity, right? Revenue is the result of the operating activity. Now, expenses, as I said, comes from one, direct cost. The other one, if the direct cost is basically, cost of, capital, labor, and natural resource, right? That goes into the production process. Indirect, then, indirect cost means it has nothing to do with the production. I mean, it's not directly related to production. Yes, that's right. That's why it's called indirect cost. And direct cost is also called total variable cost in microeconomics. And it's also called CGS in accounting. Okay? Indirect cost, I guess I'm gonna switch this. Okay, that's fine. Indirect cost is also called total cost in microeconomics, but in accounting, it's called OPEX, short for operating expenses. And this symbol, it's not equal to, but it's approximately equal to or equivalent to, approximately equal to, right? Or equivalent to. So what they call operating expenses in accounting is slightly, it's not exactly the same, but slightly different, but they're almost the same. Slightly almost the same as total fixed cost. So I'm gonna basically, direct cost is the direct cost or total variable cost. That's the bigger portion or bigger chunk of the expense. I mean, if a company has more indirect cost than direct cost, then that really is a problem, right? Such a business would is going to close down anytime soon. They all want to minimize this. They all want to minimize indirect cost or fixed cost. They all want to minimize. They all want to minimize fixed cost. And one good example is, when Amazon first came out, that was like 1996 when Amazon first came out. It was revolutionary. Why? You don't need brick and mortar store anymore. Brick and mortar, right? They had just, they just had a central warehouse somewhere, and then from the central warehouse, you ship the goods to the buyers. So you don't need, really, a lot of fixed cost, right? Well, if you can minimize fixed costs, right, um, you can increase your profit a lot. So I'm going to come back to expenses a little later, but think about it. When you have income and expenses, the next move is what? You'll have to subtract expenses, isn't that right? You'll have to subtract expenses. Of course, because these expenses must be covered. These expenses must be covered by or paid for by the income, right? So once you subtract it, it's called, the result is called, uh, but roughly, think about it. When you subtract expense from income, what do you call that? What do you call the result? Hmm? If you subtract expenses from income, what do you call that result? Anyone? Come on, why is it so awfully quiet? I have like 15 people here and nobody's. If you subtract expenses from income, what's that called? It's a common sense thing, isn't it right? Isn't it rather common sense? You subtract expenses from income. What is that? Subtract cost from revenue. What is that?
Profit?
Revenue. No?
What? I said subtract cost from revenue. Then how can it be back to revenue?
Profit?
Yes, who said profit?
Shirley.
Shirley. Okay, Shirley. Yes. It's only natural that it's called profit. Yes, Shirley, you got 0.5. Of course, should be called profit. But in our okay, so it should be called profit. But at this point is called operating profit. Operating profit. Okay? But in accounting, they also call this operating income. Now that is, I don't like to call it operating income. I mean, there's also a good reason why they call it that way. But logically, think about it. From income, you subtracted expenses. So calling it income again, it's like self-defeating. I mean, you subtracted expenses from income. How can it be called income again? Of course, it's not called income. It's called operating income. Operating income. But operating income, anyway, the term income being used repeatedly like that, it's I don't feel all right with it. I feel I feel qualms about it, and I don't feel why, because some people can be misled. Some people can think oh, income is the same thing as profit. No, if income is the same thing as profit, this is already profit. Huh? That means this is already the profit. But no way, it's not profit. It's think about it. Profit is something that's left after paying out expenses. That's profit after subtracting expenses, right? It goes without saying. If you run a coffee shop, let's say you run a coffee shop, right? You sell coffee for $5 a cup. I don't know what, cappuccino or whatever, $5. That's the price. And so if you sold 1,000 cups of cappuccino, then your income or revenue is $5,000. Isn't it right? Because price times quantity, right? $5, right? Times 1,000. That's income. That's revenue. It's not profit. Why? Because there's a cost to making that coffee, right? There's a cost to making that coffee. Obviously, there is raw material, coffee beans. There's labor, the barista, or you, and capital, the coffee machine, espresso machine, and things like that. So, suppose this direct cost is $2 per cup, $2. You have to subtract that, right? And if you subtract that, you only subtracted direct cost. So at that point, it's not called operating profit yet. At that point, it's called gross profit or gross margin. Gross profit. Only after subtracting indirect cost, then you arrive at operating profit or operating income. So again, the word income is not appropriate to use here, right? Here it should be called profit. And Greek character pi stands for profit in microeconomics. It's the symbol for profit.
Professor, I'm sorry, I have a
Yeah.
question. What is gross profit means?
Gross profit, I just explained. If you subtract only the direct cost from the income, then that's called gross profit. So gross profit is the result of subtracting only the direct cost. So it's before subtracting indirect cost. Okay?
Okay.
All right. So it's not really profit just yet. Most of the times it's also called gross margin. Gross margin. And what is indirect? Indirect cost has nothing to do with the actual production. For example, in that coffee shop example, you sell coffee, the cappuccino, for $5 a cup, and out of those, those $5, we assume $2 is the direct cost. So $2 is the cost of it's per unit. All of this is per unit because we are talking about per cup, $5. So those $2 will break into something, a dollar or 70 cents or whatever for capital. In other words, use of coffee machine, right? And about $1.50 goes to a barista, the labor, right? And 50 cents or something like that, 75 cents will go for that's the coffee beans, right? So all of those things are in direct proportion, right? Direct cost is in direct proportion with the quantity sold. Isn't that right? That's why it's called direct cost. But indirect cost is something like rent. Your coffee shop, you're leasing the space, right? Obviously, when you have a coffee shop, you're leasing the space. So monthly rent has nothing to do with your production level. Think about it. During the month, when during the good month, your business would be booming, and with the when the business is booming, you sell probably in regular month you may be selling 1,000 cups, but in a very good month you are selling 2,000 cups of cappuccino, right? That's then that's $10,000 revenue from cappuccino alone, right? But some bad month, if you have a bad month, you may sell only 500 cups, 500 cups of cappuccino. Then your revenue is halved, right? It's not even 5,000, it will be 2,500. Now, so think about it. Direct cost varies or changes with uh, output level or the production level, right? Output level or production level. That's why it's called total variable cost. Total variable cost, because it varies with the production level, right? Or output level. Whereas, rent doesn't change. Think about it. You pay during the good month, just because your sales was, sale was, extremely high. Um, uh, you don't pay. During the good month, you don't pay double the rent. You don't, the landlord doesn't charge you double. He doesn't double the rent. And landlord doesn't know. He doesn't know if your sales has doubled or not. He doesn't care. He just gets. And even during the bad month, your revenue was halved, right? Your revenue was halved, but you still pay the same rent. Yeah. That's indirect cost. Something like that is indirect cost, and it is fixed. It is fixed, meaning it doesn't change with the production level. Hence, it is called fixed cost. Rent is just one example. Um, but I will have to use a bigger example to give you other examples of fixed cost, but indirect cost. But anyway, you subtract uh, expenses, meaning you subtract both direct and indirect cost, then uh, the result is called operating profit. Also, accounting calls it operating income, but I'm telling you, don't get misled by the term income. Okay. Now, it's the same thing. It's also called EBIT. Operating profit is also called EBIT. Okay, what is EBIT? Does anyone has any idea what EBIT is? Anyone?
Can you repeat that, please?
Yeah, what is EBIT? Anyone have any idea what EBIT is?
Um, is it earnings before interest and taxes?
Yes, 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 you're right. And who said that?
Yugen.
Yugen. Okay, Yugen, you got 0.5. Um, okay, so you might wonder, I'm sure you would wonder, all those, participation points, do I really get it? Yeah, you really got it, because I'm going to show you. If you go to, I don't know if you have noticed, but if you go to the assignments, right, there is a file that says attendance record and homework results as of, right? And if you open that, this is attendance. Uh, but the first worksheet is basically the homework results, average and standard deviation, right? And these are, this is attendance and participation, and this is weighted average. Of course, you don't have, I told you, 5 homeworks, right? 40%. And then, 25% from midterm and final, right? So anyway, look at the attendance. I mean, this is weird. There's no average here because this is attendance. I think it's trying to enter that cell into the attendance. I mean, into the weighted average. Now, let me go back there and then, okay. So you can see here participation, right? You see, it's the sum of everything. I mean, they all have different. It's anonymous, of course. Row 5, whoever this student is, whoever this person is, row 5. This student got racked up 3.5 so far. Attendance alone couldn't have done that. There she got 0.5, he or she got 0.5, 0.5, right? And then this person earned 5 points so far. And there, right? There you go. So they all add up. I don't know what this is. This shouldn't even be there. Something was, that. And attendance alone, how many, until August 2nd, there were eight sessions. So 0.25 times 8, it should be 2 only, right? Attendance alone, it would be 2. But with participation points, people who have 2 here just attended and answering no questions. But if you have answered, this student has answered a lot of questions, and then so far already, earned, I mean, despite 2 absences, earned 6.5 attendance and participation points. So that's really important, right? That's something that can make a difference. It can really make a difference. Okay. Yeah, Elizabeth, you raised your hand, right? Elizabeth? You have a question, Elizabeth? Okay.
I got it answered already, Professor. Don't bother.
Oh, okay. You got your answer already.
Yeah,
Right.
I looked at the Excel on my side. Thank you.
Okay. All righty. Good. So where was I? So Yugen got 0.5. EBIT stands for earnings before interest and taxes. So interesting thing is, I like this terminology because there are two ways of naming these things, and so one way, if you follow this column, it's just conventional, very conventional terminology. The names are very conventional. But if you follow this column, the names of these line items are more analytical and self-predictive, right? Analytical and self-predictive. Why? First of all, from earnings before interest and taxes, we can already tell what's going to happen next, right? How? Now think about it. The name is earnings before interest and taxes, right? So of course we can tell, earnings is the same thing as profit. Yeah, earnings is the same thing as profit, but then it's before interest and taxes. So what should come next? it can already tell you, it's already letting you predict. It's already letting you predict what's going to happen next. So what do you think has to come next? Anyone? Come on, guys. The name is earnings before interest and taxes. So what should happen next? You can tell already from the name what should happen next. Anyone? Come on, what do you think?
Profit.
No, what profit? I mean, we're looking at profit. This is profit. This means profit, right? And I told you earnings means profit. They mean the same thing. But this profit is called operating profit, which means this is the result of the operation. Which means this is the result of the operating activity. Then, huh? Can you? Hold on a second. I can't hear anything. Let me max. I maxed out my speaker volume, so now if I can hear you, then it's not my fault.
Yeah, I said liability.
Liability? No. Liability is not an income statement line item. Liability is not income statement thing. Liability is a balance sheet thing. Right? This is why I make this, I emphasize this, very strongly, firmly over and over, because even after taking accounting class, a lot of students confuse between the balance sheet and income statement. They confuse about the goals or purposes of these two statements, and then they also confuse the line items, the line items that make up these statements. Liability is not income statement line item, it's balance sheet line item. And but yet it is related to what comes next is related to the balance liability. But anyway, but I've been telling you from the name is already self-predicting. Name is already self-predicting. So from the name, earnings before interest and taxes. So then you can guess what comes next. What is the next step then? From the name, you should be able to take a guess already, because the name is already analytical. Name is analytical and is self-predicting. Anybody? Okay, I'm not gonna.
Professor, can you repeat the question?
Oh, I've been asking you over and over. How many times? I'm tired. What comes next? And you can predict it from the name of this thing. It's EBIT, earnings before interest and taxes. So from the name, the name is already self-predicting. So from the name, you can tell what should come next. What do you think? What should come next? Okay, I repeated the question already now so many times. I think you deliberately did that to make me tired, to exhaust me, huh?
No, I did not. No, I did not. I asked you to repeat the question, but you went on. I still don't know what you're asking, so that's why. I did not ask you that to get you tired. If I wanted,
listen, I'm just kidding. But it is tiring. It's exhausting to repeat the same question over and over. What comes next is interest, right? Don't you think? Logically, what happens next should be interest. In other words, you should pay out interest. And it is already predicted from the name. Isn't that right? That's why I'm telling you, from the name, it's already predictive. The name is earnings before interest and taxes, right? That means that's the profit before paying interest and taxes. So then, naturally, if this is before interest and taxes, next is interest, right? So you pay interest, but why is there interest in the first place? And someone said liability, and I said, yeah, it's, liability is not the right answer here, but it is related to a liability. Why? What does liability mean?
Could it be debt?
Yeah, liability is debt. Yeah, and liability is debt. And who is this? Who was
Eugen.
this? Eugen. Okay, Eugen, you got another 0.5. Yes, because you have debt. The company has debt, right? And it is quite natural. You think, oh, if the company has debt, you might think, oh, isn't that a bad thing? No, not at all. It's quite natural. All businesses have debt, right? All businesses have debt. And you cannot start up a business without getting a loan from somewhere, unless you are born rich, unless you're born, extremely rich, right? Even if you're born extremely rich, um, to start up a business, it's always a nice idea to get some loan, right? You don't put all your uh, own money or equity. I mean, you put, you have to put, if you put some of your own money into that startup, that's your equity in that business. But, if it costs $1 billion for this startup to kick off this startup, then some of it is your, that some of that 1 billion, you have to put some of your own money into. But also some of it, the rest of it is then the debt, right? So if you have a debt, then you incur interest, right? All the debts incur interest, so you pay interest. And then after paying interest, okay, after paying interest, what should that be called? And as I said, we have two columns of nomenclature, two columns of naming, right? The left column is the conventional names, conventional terminology. Right column is self-predictive and analytical terminology. So let's do this first. So after paying out interest, what should this be called? It was EBIT before. After paying interest, it should be changed to what? It should be called what? What should it be called? Anyone? Okay, I don't know. If you're not going to answer the question, please, mute your microphone. So, anyone? No, not this one. I keep hitting the wrong one. After paying interest.
So after interest being paid, what is called?
Taxes?
No. After, is it taxes already? I mean, after subtracting interest, then after paying out interest, what does this become? This doesn't become taxes. It's your earnings. After paying out interest, what?
Net income?
No. It's not net income.
That's the earnings before the interest.
Say that again.
Earnings before interest.
No. Why before interest? Earnings before interest was this. This was earnings before interest.
Oh, I thought you were
Please,
talking about that. So
logically,
your
interest.
communication is like, I don't know what happened with your microphone, but it's like breaking up.
Yeah, I understand. But but if you have been following, interest has interest was paid already. Interest has come out of this, right? Interest has come out of EBIT. So then, how should the name? What should that be changed to? I mean, what should be the name?
Earnings after interest.
Earnings after interest. Okay, good try. Earnings after interest. Yeah, that sounds logical. At least that is logical. But actually, no. Um, the name is EBT, earnings before taxes. Okay. Please mute your microphone, please, if you're not. Think about it. From EBIT, isn't it quite natural? Isn't it quite also logical? From EBIT, I is gone now because you paid out interest. Interest is gone. From EBIT, if interest is gone, then what's left? EBT, earnings before taxes. Isn't that right? Earnings before taxes. Does that make sense to everyone? And then I told you this is the right column is the self-predictive and analytical terminology, column of terminology, and the left column is conventional. If that's earnings before paying taxes, right? Earnings before taxes, in conventional terminology, what is it called? What's the conventional terminology counterpart to EBT? Anyone?
Would it be cost of goods sold?
No. Why suddenly cost of goods sold? Cost of goods sold is here. This is cost of goods sold. Cost of goods sold is direct cost. How can it be suddenly cost? This is earnings. EBT stands earnings before taxes. E stands for earnings. And I told you earnings mean profit. And how can suddenly profit be equal to a cost? Just think logically. If that's the earnings before taxes, right? Then conventionally, what is that called? Conventionally?
Would it be operational income?
No.
No.
There is no such word as operational income, but operating income. Operating income is this. This is operating income. I've been telling you, it's called operating income or operating profit, but operating income is, not. It sounds, it's not the best. It can be misleading. So I don't like operating income, but operating profit. Oh, and if you typed in something in the chat box, please keep in mind, I can't see that because what I can see, I have only one screen. What I can see on my screen, on my monitor, is this whiteboard. So I'll have to close the whiteboard to see what's in the chat box. So
my hand is up, Professor, so I can say it out loud for you.
Okay, Elizabeth,
I was
can you
asking if it's net income.
Net income? No, not yet. Not yet. Somebody said net income already, but I said no, not yet. You're not at net income yet.
Okay.
So in conventional terminology, what do you think it is called? It is called, okay, I'll give it, it is called taxable income. Taxable income. Don't you think? Isn't that what it is? That's the earnings before taxes. That's the earnings or profit before taxes. So before taxes, that means what comes next is taxes, right? So this is the profit facing the taxation, right? This is the profit that's subject to taxation. Therefore, taxable income. So let me, too small. This is too small. So let me erase that and Elizabeth, you have another question? If you don't, I will.
No.
Okay, thank you. A hand was raised, so let me make it big. So let's do it this way. We are after subtracting, expenses from income, right? I'm not gonna. This one is red. Income, expenses, you subtract this. Operating profit or operating income, and then the same thing is same thing as EBIT, right? And from EBIT you pay interest. Once you pay interest, it becomes, because I is gone, right? Think about it. I is gone. So now it only becomes EBT. And if it is EBT, the conventional terminology is taxable income, right? Because that's exactly what it is. It's the same thing. Taxable income, EBT, the same thing, right? Now, then, since it is taxable income, what comes next then? What should come next? You have earnings before taxes, right? Which is also called taxable income. So what should come next? Come on, guys, this is very elementary. I mean, this is very...
Net income?
Huh? No, it's not yet. But please think logically. And I've been telling you, this column is very predictive, right? The names, the terminology in this right column is very predictive. So think about it. From EBIT, because it was EBIT, so next came the interest. Isn't that right?
So
From
it's interest
EBIT,
expenses. So is it then interest expenses?
What are you talking about? Are you looking at this or not? Interest expense is already there. This came out of interest expense, came out of EBIT. I mean, in other words, you pay interest from EBIT. That's why the name is EBIT, earnings before interest and taxes. So then, from EBIT, interest I was dropped. Then it became EBT, earnings before taxes. That's which is also taxable income, the same thing as taxable income. So this is the income before paying taxes. So what should come next?
Earnings. Yeah, earnings.
No, this earnings. This is earnings. They are earnings. The name is earnings because something EBIT, EBT. They are all earnings. Looking at this, are you looking at this drawing? Are you looking at this whiteboard that I'm doing?
Yes,
Huh?
yes.
Is the
Who
net
said?
earning?
Who said what?
Net earning?
No. Before net earnings, what should come? What should come?
The income tax or something like that?
Yeah. Who said what? Who said income tax? Yes, of course. Think about it. It's taxes. What should come next is taxes. How come nobody gets this? Only one. Ah, don't you see the logic here? From EBIT, you pay interest. You pay interest from EBIT, so I drops out. So I drops out. So it becomes EBT, earnings before taxes.
Yeah.
Before taxes. So this is the taxable income before taxes. This is the income subject to taxation, facing taxation. Then what should happen next? It's only natural that and logical that what should happen next is taxes, right? This must
Yep.
come. Anyone? So who gave me? Who said that? Who said income tax?
Harold.
Who?
Harold.
Merrill.
Harold. 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 Harold.
Harold.
Yes.
Okay. Harold. Yes. Harold, I'll give you 0.5.
Thank you.
You're welcome.
So,
This is a lot. Think about it. I've been telling you, this right column of terminology is very logical and self-predictive. So the name is already analytical. EBIT, earnings before interest and taxes, and it's predictive, self-predictive. What's going to happen? It's before interest, so interest. You'll have to pay interest, and then so I drops out because you paid interest. So it's EBT. The name is also very analytical. It's earnings before taxes. And also I said the same thing is taxable income, right? And who said taxable income? I mean, who said income taxes? Who said taxable income? Nobody ever said taxable income. I guess nobody ever said taxable income. But Harold said, what comes next is taxes. Yeah, think about it. So what should happen next is taxes, because it says it's before taxes, earnings before taxes.
The net
Right?
earning.
Hold on. So before taxes, right? So comes taxes. So you might think, oh, then after that, T must drop out. Yes, that's true. But if T drops out, what would be the name? It will just be EB. What is then earnings before? Just earnings before? That would be ridiculous. That doesn't mean anything. So actually, then after paying taxes, it should be called what? It's called after paying taxes. What is it called? What do you think?
Net income.
Yeah, you're right. Net income is this column, right? The left column, you call that after paying taxes. It's called net income or net profit. I would rather call it net profit.
Or net earning as well too.
Net earnings. Okay, that's fine. That's fine. But in this column, in the right column, what should it be called? And I told you it's analytical. So after you pay taxes. So after paying taxes, what should it be called?
Profit.
Somebody said already profit, right? That's net profit, I said. Net profit. That's the right column of the names. If you go by the left column, there's a logic in the left column, right? There's some system going, can't you see? There's some system going on in the right column, right? So according to that system, what should it be called?
Earnings.
Yes, it's earnings, but everything here in the right column is earnings before interest and taxes, earnings before taxes. So in the right column, now it should be called what?
I know the part's gross profit, but I know that you have another terminology for that.
Yeah, of course. We already know this is net profit, right? But what's the other terminology? Following the logic of the system of the right column. Okay, this is going to take too. This is taking too much time. It should be. It's called EAT. It's called EAT. And what do you think it is? What do you think
Earnings
EAT?
after taxes.
Yes, earnings after taxes. Who said that?
Laurier.
Maureen?
Laurier.
Maurier? Do we have? I'm sorry.
Last name Porter. Last name is
Porter?
Porter. Yes.
Okay. Loretta. Your first name is Loretta. We have only
No,
one.
not Laurier.
Laurier. Okay.
Yes,
Anyway,
last name Porter.
I'll look up your. Okay, Porter. Last name Porter. I will give you 0.5. Yeah. Now think about it. Logically, the name is quite. Name makes perfect sense logically because it's after taxes. It's earnings after paying taxes, hence called EAT, earnings after taxes. Okay? Earnings after taxes. Alrighty, we'll have to take a break here. It's 4:17. We'll take a 10-minute and come back at reconvene 4:27:28. Okay. So let me do that.
Professor,
Yeah.
hi, this is Shirley. When can we go over an example in regards
Okay,
to
let's
tolerances?
do that after the break. I really need to take a break. I'm exhausted. Okay? Let's take a break.
We on break?
Yes. Yes, okay, I'm great.
All right, we're back. We're back. We're back. So let's see. I think I pretty much wrapped up um, the income. It's not complete yet but we arrived at the conclusion of the income statement. Uh, the conclusion of the income statement is, of course, net profit, right? Or EAT. Of course, profit is not always positive. Profit can be positive or profit can be negative, right? If the profit is negative, that's called, uh, of course, that's called loss. But the also the thing is, um, we need to talk more about the CGS or direct cost, CGS and operating expenses. That uh, we'll have to do, in the second half. But okay, before I go on with the second half of this, with the someone had a question about. I think Shirley had a question about the homework, right?
Yes, I just wanted you to do an example for question
Can you,
three and question. Okay.
okay, you're talking about the. Are you talking about the summary practice test, question three, problem
Yeah,
three, and okay, let me quickly
number
take a
three,
look.
number three and number five.
Okay, hold on. But I don't think the summary practice three is part of the is part of the homework. But let me take a look.
It's
Uh,
under the screenshot, so I'm not sure.
hmm, okay, I think seven is look look. This is not. You go to the
Oh, so the ones that you highlighted is the ones from the questions that you want us to do.
yeah. Look,
Oh,
homework. Let's see. Homework two. Uh, LU 12-1A numbers 1 through 5, 12-2A numbers 1 through 4, word problem 12-15 only, 12-15 only. You understand? It's not 12 through 15, 12-15. Okay?
oh, okay.
And they are all marked by asterisk. And summary practice test number 7, not all of them, number 7. And then chapter 13, 13-1A, 1 and 2, 13-2A, 1 through 3, 1 through 3, and then
Okay.
13-3A. So only this.
Okay, so
So
you do it like a similar one to number three, that would be fine.
yeah. And then here, if it is word problems, you see the asterisk there. That's the one. And summary practice test number 7. Okay, number 7 only. 13A, 13-1A, 1, 2, right? 13-2A, 1 through 3, 13-3A. But since you brought it up, right? Since you brought it up, I mean, it won't hurt to know. Um, so your question was number 3, right? Shirley Katz deposited 30K in a savings account at 5% interest, compounded semi-annually. So M is 2, that means. At the beginning of year 4, uh, deposits additional 80K at 5%, compounded also semi-annually. At the end of year 6, what is the balance of Charlotte's account. Then think about, I mean, let's use the, this is a very basic question. So the timeline, right? Let's do time 0, and at this 30K, she deposits 30K at 5%. M equals 2. That means, okay, end of our timeline is year 6, right? And then from here, okay, this is year 6, and this is this 30K will earn interest, compounded how many times? 12 times. The future value of that 30K will be 30K times 1.05 raised to 6. And then at the beginning of year 4, she puts 50K, also 5% semi-annual. Then this one, future value of this one is 50K times 1.0, this is not 6, I'm sorry, 12, right? Isn't that? Interest rate, I forgot to make adjustment. So this one, future value will be, I'm not going to use dollar sign. It takes. Where is it? What happened? Deleted everything. Okay, that's fine. I'm gonna redo. End of year 6, year 4. 1, 2, 3, 4, 5, 6. So this is beginning of. So actually, this is end of year 6 if you think about it, right? Because 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6. Yeah, and this is okay. Oh, yeah. We started from 0, right? We started from 0. So if you deposit 30K here at 5%, and M is 2, then what does that mean? R is 0.5, 0.5 because it's 5% divided by 2, 2.5, and it's 6 years. So T is 6. That means N is 12. The future value of this 30K will be 30K times 1.025 raised to 12. And then at the beginning of year 4, beginning of year 2, beginning of year 3, beginning of year 4 is here actually, because that's the end of year 3. Isn't that right? No. Beginning of year 4. Right. Beginning of year 4. Now think about it. She makes 80K deposit here. And then the same thing. Then the future value until the end of year 6, right? So the future value, this one, 8K times 1.025 raised to, it's not 6, right? Because 3 years. Beginning of year 4 is the end of year 3. So from the beginning of year 4 to the end of year 6, there are 3 years, right? Isn't that right? So then think about it. By the end of year 3, then let's call this future value A. Let's call this future value B. So whoever that is, whoever that person is, at the end of year 6, you'll have FVA plus FVB, right? Whatever the future, you'll have to add them up, right? That's number 3. Well, again, that's I mean, if you're interested, you can try, right? Any other questions? And I sent out.
Oh, yes, I was asking about question 5, but that you said that's
5.
the whole
Okay,
thing.
Many Rose deposited 16,000 in Street Bank at 6%. So this is very elementary, very juvenile thing. Why? Names don't matter. You don't, does it really matter? Minnie Rose, it doesn't really matter. Street Bank doesn't matter. Earl Miller doesn't matter. No. Just this is what makes this thing like elementary school, right? But let forget Mr. X or Miss X. That's enough. Minnie Rose deposited 16K at 6% interest compounded quarterly. What is the effective? Yeah, effective rate. So you were there was no time. So how do I do the effective rate? But effective rate doesn't require time. We did it yesterday. R star is just this. Okay. In other words, go back to I mean, it's all over there. Oh, that's here in time value of money. EAR or APR. What does it here? It's not showing fully everything, but because I collect the but that's the case where R is 100%. But if whatever if the R is not 100%, we're gonna the given APR. We did this exercise, so if you go back to the video, you will see what we did. So look at what I did here for APY, right? It's 5, but in this example, time is 5 years, but it doesn't matter. It doesn't matter. All what was needed was B2 APR over N, which is right? D2 raised to N minus 1. Of course, you have to subtract 1 to get the net return. Also, and then in the slide, right? As we go to the Oh, I'll have to. Uh, I have already downloaded it, so let me open it from. Compounding. So it's towards the end of. You see R star APY, right? R star effective rate, right? 1 plus APR over M raised to M minus 1. In other words, no T is needed. T is not needed because basically it is 1 year thing. I mean, effective rate is basically how it's a 1 year thing. I mean, what an annual rate APR effectively, right? So annual rate, right? So you don't need any T, right? Okay, so any other question? Any other questions? Yes, Elizabeth.
Professor, I was reviewing your homework 2 review just to get an idea
Mhm.
since the last homework had so many corrections on it.
Mhm.
You want me, is it okay if I follow that same, like how you started building your homework 2 as review? Is it okay if I do it like that also on my Excel?
Well, yeah, yes, I made it available for you so that you can do it like that exactly.
Okay, okay, I will do it like that. Thank you.
Yeah, yeah. You're welcome. Uh,
Hello,
does
Professor.
everyone understand what she was talking about? Um, there is this video here, homework 2 preview. It's not review, but preview because you're before doing the homework. You're. Uh, but if you watch that, I sent out an email about that. If you watch that, you will it will give you a clear guideline to what needs to be done. Okay. There was okay. Someone else had a question. I heard someone's
Yes,
voice.
yes,
Okay.
Professor.
Yeah, Loria. Yeah, Loria.
Um,
Yeah.
I wanted to know what about the first homework? Are you still accepting it? If I wanted to like correct
No,
it and do
no,
it over?
no, no, no. It's too late.
Too
We
late?
don't.
Okay.
Yeah, it's too late. I don't have time. And as in the as stated in the announcement, and it's a look. It's a painful. I had like how many homeworks submitted? 15, 16. I don't. Well, almost everyone submitted homework, and then it takes a lot of time to comment like that. It's a really arduous job, right? So you have to submit it on time, and I can do it only on weekend. Um, and there's a time for everything. If you so in my announcements it says what is this homework 2. It says only the on-time submission will be awarded full credit, and if any late submission, but if it is within 2 days, still there will be 10% late penalty. In the first homework, I didn't even do that. No submission more than 2 days late. In the first homework, I didn't even did I put that? Yeah, penalty below. It just took so much of my time and energy. I couldn't even think about taking 10% off for late submissions. I have to keep track of who submitted at what date. I have to, but it's too much, micromanagement, and then obviously, and it was the first homework, so I didn't do that. But from the second homework, if you are 2 days late, then I mean within 2 days, right? Uh, there will be 10% late penalty per each day late. Okay. Alrighty. Any other questions? Any other questions? Alrighty. So let's get back to. So where was I? Okay. So we were talking about. Okay. Income. We're not gonna. Since you already know by now, income is mainly sales revenue, and which is P times Q. You see, I switched the and secondary source of income is investment income, or generally categorized as passive income. Investment. Okay, I hope this will work. I have this stylus pen, but it's not really working. This is a problem. Okay, and expenses. Okay, it doesn't work. So I'm gonna have to use my finger again. Expenses, right? We already know the direct. What is direct cost and what is indirect cost? And the direct cost is generally called, in microeconomics, is called total variable cost. In accounting, is called CGS, cost of goods sold. So think about it. We already know what is the cost of the direct inputs of production, direct inputs, and so it's basically per unit, right? Let's say, and let's go back to the coffee shop example. If you're selling the cappuccino for $5, that $5 is price, right? And price is always a per unit concept, right? Per unit concept. So it increases or decreases linearly, right? With quantity sold. So TR stands for total revenue, right? So whatever, if you sold, 1,000 units, 1,000 units or cups of, 1,000 cups of cappuccino, that's going to be 5K, right? Now, as I said, direct cost is the cost of the direct inputs, and the direct inputs, let's say that's $2 per unit, right? Per unit. And the capital, labor, and natural resource. Of course, capital is coffee machine, right? Let's say it is, coffee machine, 75 cents, right? The cost of coffee machine or using coffee machine is 75 cents per unit. This is coffee shop. I keep saying unit, but you got to understand that means cups, but calling it coffee cups, I mean 5,000 cups, one cup. Let's standardize it. If you standardize it, everything is called unit, right? Every industrial product is called unit, one unit. And labor, let's say labor is $1.20. Labor is the most expensive thing. Let's say $1.50. $1.50. So per each cup, you pay $1.50 to your, barista. And natural resource, then that makes it, 75 cents again. That's the only way. That's the only way it can be $2, right? But think about it. The reason it is called total variable cost is because it's not total if you are talking about only one unit. But you sold 1,000 units, isn't that right? So you sold 1,000 units times 1,000, right? So this will be $2,000. It will be 2K, right? So in other words, if you sold 1,000, it's 2K. But if you sold 10,000, it's going to be 20K. If you sold 10,000 units, your revenue will be 50K, right? And just like that, if you sold 10,000, your direct cost will be 2K. So in other words, your direct cost is also linear. It's proportional to the quantity sold, right? Or quantity made. So so we can say it changes, right? It varies or changes with the quantity. I mean, think about it. Revenue changes with quantity, right? And our direct cost changes or varies with quantity, right? You made 1,000 units. Your direct cost is 2K. You made 10,000 units. Direct cost is 20K. So that's why it is called total variable cost. Total variable cost, right? It varies with output level or quantity, right? And in this example, $2. This two. What would you call this $2? I mean, if you name it, what would be the name of it? $2. What would you name that $2? Anyone? Or just think logically. If you are going to name that $2, what would you call it? What should be the name of that $2? Anyone? Come on. Just, by any logic, the only name it can fit, right? The only name that can fit this is production cost per unit, isn't that right? That's called production cost per unit, right? That makes sense, everyone? That's per unit production cost. Hello, anybody listening? Are you guys there?
Yes.
Yeah, we're listening.
Good. All right. So production cost per unit, that makes sense? then that should make perfect sense. That's because per unit, right? That's the production cost per unit. And then another name, if we so production cost per unit is also called, it's called average variable cost. Average variable cost. Why? If you make 1,000 units, it's 2K. Total variable cost is 2K. If you make 10,000 units, total variable cost is 20K. So basically, $2 is always the number that you arrive at, right? This $2 is the number that you arrive at when you divide total variable cost, when you divide total by quantity. Isn't that right? When you divide total by quantity, total variable cost by quantity, $2 is, that's always, the number you arrive at. But, basically, if you divide total by quantity, if you divide any total by quantity, what is that called? If you divide total by quantity, what is that called?
Average?
Yes. Who said average?
Shirley.
Shirley. Okay, Shirley, you got another 0.5. Yeah, of course, it's average. So we divided total variable cost by quantity. So it's only natural that it's called average variable cost. And average variable cost is another name for production cost per unit. I'm not going to spell out everything. It takes too much time. Production, right? Another name for production cost per unit production cost is AVC. So then between AVC and TVC, right? Total variable cost is AVC times quantity, right? Isn't that right? That makes sense. You divide total by quantity, you arrive at average, and average times quantity will be total, right? That makes sense. So that's basically what total variable cost is, and it's also called CGS, cost of goods sold, in accounting. But now, actually, this to be very strict, to use strict analytical lens, this is actually cost of goods produced. If you think about it, cost of goods made or produced, isn't that right? Total variable cost is, so in other words, if you produced, because a production cost per unit times quantity is total variable cost, or that means quantity is the quantity produced, right? This quantity means quantity produced. And then think about it. There's no guarantee that the quantity produced is the same thing as quantity sold, right? There's no, I mean, sometimes it can. Sometimes it's the same number. Sometimes it's not. Quantity produced is not exactly the quantity sold. But eventually they will be the same. Eventually. But think about it. You produced, 10,000 units, but what was sold could be only 9,950 units, right? Then 50 units are left unsold. So in other words, it's not always the same thing, but eventually, think about it. If you don't let's say you made 10,000 units, but not only 9,900 units were sold. But then what do? You just you just leave it like that. You just watch it hands down. What do the stores do? What do the businesses do when they have 10,000 units to sell, units they made, or 10,000 units they have it in their inventory, but so far they have sold only 9,900 units. Then what do they do?
Put it on sale.
Yes, of course. And who said that? Who said?
Shirley.
Huh? Shirley? Shirley, yeah, Shirley. I'll give you another 0.5. Yes. So in other words, when when you cannot push sale anymore, I mean, when it's not being sold at the same price, then at the current price, then the next thing you do is you drop the price. And if you drop the price, then it will sell. And until the last unit, if you drop the, let's say there's persisting, last couple of units are still persisting, they're not selling. You drop the price enough, then you can sell up to the last unit. So in other words, eventually quantity produced will become quantity sold, right? So this slight gap can be closed. And also there is, in economics, there is a also perfect side or perfect universe assumption, where forecast is always correct, so there will be no surplus or no shortage. But that will that we're not. I'm going to talk about that next time. But also look at this CGS, right? That's cost of goods sold. But what is this? Means goods sold, right? Goods sold. So then think about it. What is the dollar value of the goods sold? What is the dollar value of goods sold? Anyone? What's the dollar value of goods sold? What do you call? What do you call the dollar amount, the dollar value of goods sold? Anyone? What is? What's the dollar value of?
Retail.
That's not dollar value. Retail is a type of business, but yeah, but your dollar value of goods sold is, what is it? Huh?
Is the total amount of your business paid?
Total amount of business what?
Pay as a direct cost.
Okay. Dollar amount of goods sold is revenue. It's called revenue. Isn't that right? Think about it. Goods sold, goods, that's plural, right? Goods means it's plural. That's total number, right? It's quantity, right? Quantity sold, right? And then to put dollar value on it, price. Isn't that right? So goods sold, dollar value of goods sold is revenue. Isn't that right? So that means cost of goods sold is, in other words, cost of revenue. Cost of revenue. Cost of revenue. That's another name for cost of goods sold. Now think about it. Cost. So that, what does that mean? That means the cost side of the revenue. CGS is the cost side of the revenue. You understand? Cost side of the. Why? Remember that coffee shop example? In that coffee shop example, you're selling, I mean, the $5, that's price. Isn't that right? That's price. $5, that's price. And then if you sold 1,000 units, that's quantity. Right? Then you arrive at 5K. What's that 5K called? Revenue. Revenue is price times quantity, isn't it right? But then each cup is $2, I mean cost, per unit cost. Per unit production cost is $2. If you sold 1,000 units, that's 2K. And what's that called? That's called TVC, total variable cost. This is average variable cost, or per unit production cost per unit. What is an average variable cost, or per unit production cost times quantity? That's total variable cost. Another name for total variable cost is CGS. Think about it. Isn't that the cost? Isn't that exactly this 2K is the cost of goods sold? This 2K is cost of goods sold. Isn't that right? Goods sold means this, 1,000 units, right? Dollar value of goods sold is 5K, which is the revenue. Make sense? So doesn't that make sense? Why this is also called cost of revenue, right? It should make sense. If you're a logical person, right? All these things will logically fall into place. Why it's called cost of revenue as well. Instead of just memorizing those things, if you understand the logic behind it, the reasoning behind it, there's nothing to memorize. Everything just flows logically, naturally. Okay? All right, I guess that's all the time we have. So I'm gonna, all righty, where am I? Oh, that's all the time. So I hope you have a good rest of the day, and don't forget the homework 2. And after homework 2, you have midterm, right? So please, don't forget. All right, take care, everyone. I will see you guys on Monday. Okay?
Professor.
All right, take care. Stop recording.